So inflation is going to continue to accelerate. Inflation is going to go into the double digits. And who knows, it may even go into the triple digits. But it's going to become a huge problem because the Fed can't do anything about it politically. Donald Trump talks about how he thinks we should have some short-term pain for long-term gain when it comes to paying high gas prices to win a war against Iran. Well, we should do the same thing in the economy.
Peter Schiff, chief economist and global strategist at Europacific Asset Management and founder of Schiff Gold. It is so wonderful to welcome you back to the show. Great to see you as always, Peter.
Thanks, Julia. Nice to see you too.
Yeah, we had you back on in December and that was such a fun conversation. And I told you, Peter, that we'd have you on more often. So I'm thrilled to have you on Fed Day. We just had the FOMC with Fed Chair Powell talking about the economy, saying this is nothing like the 1970s. And I saw you post on X that you're like, well, it's much worse. So let's talk about the state of the economy, the big picture. Where are we today? And why do you say it's much worse than the 1970s?
Well, in the 1970s, the national debt was still below $1 trillion. It didn't even get to $1 trillion, I think, until 1980. And so we just passed 39 trillion. If anybody's keeping score, I think that was yesterday. But it's exploding out of control. The national debt has increased by 2.8 trillion just in the last 14 months since Donald Trump's been president. But if you look at the trajectory of the debt and what's likely to happen in the coming years, I think we might actually hit 50 trillion before Trump finishes his term. So that'd be about 11 trillion more in debt over the next 3 years. But I think what could drive the debt to that level would be a recession, which I think we could be on the cusp of an official recession. That will reduce government tax revenue and increase expenditures. Upward pressure on interest rates that will also increase the debt service cost of the government, and the war. Trump just started a war. And, we know from history, wars last a lot longer and cost a lot more than anybody expects. And so all the money to pay for the war is going to be borrowed. And so the debt is just going to explode. And so we're in a much weaker position than we were in the 1970s, because the way the Fed was able to get the inflation genie back in the bottle, the genie which it let out of the bottle, was by letting short-term interest rates rise to 20%. Now, we could afford to pay 20% in 1980 because we didn't have that much debt. We can't afford to pay half that now because we have so much debt. Powell talked about that there's some conflicts in the mandate, some tension, between rising unemployment and rising inflation. So there's a little tension. They're not really sure if they should cut rates or leave them alone. They should be hiking rates. I mean, that's obviously what the data show, but they're not doing that. But it's a lot more than just tension. The economy is very weak. The labor market, if you look at the data, forget about Trump's grandiose claims about this booming economy and the hottest economy in history. The U.S. economy only added about 150,000 jobs all last year in total. And about half of them were in healthcare. You can contrast that to over 2 million jobs that were added in 2024. When we supposedly had the worst economy in history, we added a lot more jobs than we did last year when we had the greatest economy in history. And in fact, if you look at GDP from 2025, Trump's first year, U.S. GDP grew by 2.2. It was 2.8 in Biden's last year. So how was the economy the worst in 2024 and the best in 2025 when GDP was 20% stronger last year? In fact, 2.2% GDP growth is worse than the worst year that Biden had. So we've got a weak economy, but it's getting weaker. Q4 GDP was just 0.7. And now we have a war, which we didn't have back then. And inflation was already accelerating. Look at the numbers we got today for producer prices for the month of February. They spiked up 0.7% in 1 month. That annualizes to 8.4% inflation. Year over year, we're getting close to 4% now in the producer prices, which are a leading indicator of consumer prices. And all this before oil prices shot up by 50%. Mm-hmm. So inflation was getting worse. The economy was getting weaker before Trump started a war, which may be one of the reasons he started the war, as a distraction from the weak economy and rising inflation, because now he can blame the weak economy and the increase in inflation on the war. And he can claim that, we had to fight the war. We had no choice, right? We had to take out Iran because all of a sudden they're this big threat, even though, prior to starting the war, they weren't supposedly a threat at all.
Okay, let's explore this a little bit further. So I take it your base case, we're going to see much more inflation and a recession. That's stagflation. Would you say is something worse than stagflation then? Like, how would you describe it?
Yeah. I mean, when you say stagflation, most people think of slow growth and high inflation. I think it's going to be a recession with high inflation. So almost like a inflationary depression. Because I don't think stagflation does it justice, because I think it's going to be something much worse again than the 1970s. And part of the reason that it doesn't look as bad now as it did back then is because the government was more honest about the inflation rate and the unemployment rate in the 70s than they are today, because the methodology that we used to calculate unemployment and inflation were very different. And so when Powell tries to contrast the current unemployment rate with the unemployment rate during the 1970s, it's apples to oranges. In fact, it's not even apples to oranges. It's apples, to bricks. They're not even similar because the methodology is so different. So if we kept track of unemployment and inflation, because it's the same thing, the way we did in the 70s, you would have to double pretty much both the unemployment rate and the inflation rate to get a number that would represent what it would have been had we measured them like we did in the 70s. So when you make that adjustment, the inflation and the unemployment rate that we have now is not that much lower. Our unemployment is not that much lower and inflation not much lower than it was in the 70s. And it's about to get a lot higher. That's the thing. Unemployment is going to spike and inflation is going to spike even more.
Okay, so then the question is, where does that leave the Fed then? It sounds like they would be trapped. Like, what decision would they have to make? Because the two mandates would be...
That's exactly the position. They're between a rock and a hard place, because if they raise rates and tighten monetary policy, which would also mean going back to quantitative tightening, if they were to raise rates by a degree that would actually be sufficient to rein in this inflation that they let loose, the rate would be so high that our debt-laden economy would completely implode, and we'd have a much worse financial crisis than the one we had in 2008. I mean, it wouldn't even be close to how bad it would be. And the government couldn't do anything to bail anybody out because the Fed would be hiking rates, not cutting them. So for that reason, I don't believe the Fed will do what Paul Volcker did in 1980, because from the Fed's perspective, the cure will be worse than the disease. So the disease of high inflation is going to get worse. And so if people thought inflation was bad when Biden was president, wait till they see how much worse it's going to be during the balance of the Trump term. And then when Trump loses in 2028 and we get a Democrat in 2029, it'll be even worse. So inflation is going to continue to accelerate in the foreseeable future. As far as the eye can see, inflation is going to go into the double digits. And who knows, it may even go into the triple digits. But it's going to become a huge problem because the Fed can't do anything about it politically. Now, they could if they were willing to, take the hit Donald Trump talks about how he thinks we should have some short-term pain for long-term gain when it comes to paying high gas prices to win a war against Iran. Well, we should do the same thing in the economy. We should have to take short-term pain, massive cuts to government spending, eliminations of agencies and departments, and we should have to take a recession, a severe recession, with a big drop in the stock market, a big drop in the real estate market. So a lot of wealth wiped out, a lot of companies going bankrupt, a lot of debt going into default. We have to take that serious economic downturn. That's the short-term pain we need, to get the long-term gain that unfortunately we're not going to get.
Because we won't take that short term.
We're not going to get that short-term pain. Mm-hmm. We're just going to get much more excruciating long-term pain.
And that would be in the form of that higher inflation. Because I guess that's kind of like passing a tax along to everybody who's going to feel it, right?
Yeah, but we're going to get inflation. So instead of the government reducing our benefits, the government will reduce the value of our benefits by creating inflation. So instead of defaulting on its bonds, it pays its bonds in money that doesn't buy very much. Instead of cutting Social Security benefits, the value of your benefits gets cut because you can't buy very much with your Social Security checks. So, but the way the government is going about it, because it's politically more palatable, is actually worse economically. So all the people who are going to suffer from inflation, if we just asked them or told them they were going to get less money, they would actually be better off, because the money they got would buy more. Instead, they're going to get all their money, but they're not going to be able to buy very much with it.
Hey everyone, I hope you were enjoying this interview. If you can, take a quick moment and hit that subscribe button. We are on a mission to hit our next goal of 100,000 subscribers, and your support could really help us get there. Thank you so much, and enjoy the rest of the interview. Okay, so you said, this got my attention, you said you think this is going to be much worse than 2008. Can you kind of elaborate a bit more? And then for that kind of scenario, what kind of probability are you putting on that?
Well, it would be worse than 2008 if the Fed did the right thing. Mm-hmm. But because it won't do the right thing, because it knows that doing so would create a worse financial crisis than 2008, it won't. And so what's going to happen is not going to look like 2008. It's going to be a different type of crisis. I think it's going to be a U.S. dollar crisis, a sovereign debt crisis, and you're going to have very high inflation. Mm-hmm. And so I think the real losses that average Americans and investors are going to suffer as a result are going to be greater than the losses that were suffered in 08, 09. And in fact, if you held on, I mean, even if, the stock market got cut in half and you didn't sell anything and you held on, the government bailouts bailed you out. The market came up and made new highs. But this time people are going to get wiped out, and the bailouts or the attempted bailouts will just wipe out what's left. So it's, the government's going to make it worse this time for investors, and all Americans are going to suffer the consequences of these misguided policies.
Mm-hmm. Okay, real quick, just to emphasize, what would be the right thing to do for the Fed? What is the right thing?
Well, the right thing to do, it would be to stop doing the wrong thing. They have to completely do an about face. Interest rates need to be much, much higher. They have to go higher than they were. The Fed started cutting rates in the summer of 2023. The Fed funds rate was at 5.25. Now it's 3.5. They got to reverse all that. We got to get back above 5. Probably, though, at this point, we probably need to go above 6. But there's no way they're going to do that. They're not going to pull the rug out from under the entire bubble economy. They're not going to crash the housing market. They're not going to crash the stock market. But the alternative is worse. The alternative is that you keep creating inflation. And if you look at the value of the U.S. stock market today, the Dow is worth less than 10 ounces of gold. Now, in 1999, the Dow was worth more than 40 ounces of gold. So you're talking about a 75% decline in the value of stocks, even though the nominal price of stocks has gone up almost fivefold. But in real terms, the stocks have lost value. And that trend is going to accelerate in the years ahead. So I think the Dow could go down to less than 2 ounces of gold in the next 5 to 10 years, which is another 80% drop in real terms. Now, during that same period of time, the Dow might go up. Who the hell knows? But it won't matter if it goes up because you're not going to be richer. You're going to be poorer, even if you own the Dow.
Mm-hmm. All right. You mentioned gold. We got to talk about it. It's pulled back today, but I think the last time you and I spoke was December. I'm not even sure. I don't think gold had even hit 5,000 at that point, but it has been on an absolute tear. What do you make of the performance then that we've seen in gold?
Well, gold got to 5,500 and change earlier in the year, and after today's almost $200 sell-off, we're back down below 5,000, or 48,817. And this sell-off was mostly the result of the hotter than expected PPI numbers. And then gold sold off a bit more after the Powell press conference, where Powell acknowledged that at the last FOMC meeting, they discussed the possibility of a rate hike. Even though nobody was recommending one, the fact that they even discussed raising rates was problematic. Now, of course, they should have hiked rates, but gold went down because investors are now pushing back the date when they expect the next rate cut. But I don't think that is what's important here. It's not about when the Fed cuts rates. Doesn't matter if the Fed cuts rates. What matters is that they're not hiking rates, and they should be hiking rates. See, investors are focused on nominal interest rates. They're saying, the nominal rates, the Fed funds rate is going to stay at 3.25. It's not going to go down to 3 or 2.75. So they're selling gold. What matters is the inflation rate. If the inflation rate doubles from 3 to 6, and even if the Fed hiked rates to 4%, which they're probably not going to do, but even if they did that, but inflation went from 3 to 6, real interest rates would decline from a positive 0.5% to a minus 2%. So a negative 2% real yield, that is very bullish for gold. That is very bearish for the dollar. The markets still don't get what's happening. The Fed is way behind the curve. There's a huge inflation problem, but the Fed is powerless to do anything about it, because if it does something about it, everything crashes. I mean, look at Fannie and Freddie Mae stock today. The GSEs were down. They're down about 65% now since the big runoff when Trump, a big run up, because Trump was talking about, privatizing them, releasing them from conservatorship, which was a commitment that he made to a lot of his donors who were big shareholders in Fannie and Freddie. I mean, the best thing he could do for the country is to get rid of them completely. The worst thing he can do is what he was promising his donors he would do. But if you look at what's happened now, the share price is collapsing. And I think it's not just because it doesn't look like Trump is going to be able to follow through with these commitments, but look what's happening to the housing market. Mortgage applications just collapsed. Refis just collapsed because mortgage rates are now rising along with other interest rates. And houses are the most overpriced they've ever been, more so than they were at their peak in 2005. We need at least a 30% reduction, if not more, 30 to 40% decline in home prices, given where mortgage rates are now. But if mortgage rates move up, which I think is more likely, who knows how much bigger the decline may need before houses are affordable again. But home prices are going to be determined by what the buyers can pay, not what the sellers are hoping to get, because that doesn't matter. And during this next downturn, with a big increase in unemployment and a recession, a lot of homes are going to get sold, and they're going to get sold at much, much lower prices. And it's going to reset all the comps, and you're going to wipe out home equity for millions of people. And what does that mean? That means a lot of those people default on their mortgages. And that means big losses for the GSEs. And that's one of the reasons I think they're starting to go down, is people are starting to get worried about forgetting about privatizing them. They're about to need another government bailout. Of course, they're owned by the government right now, so the government would be bailing itself out. But the point is, who would want to buy Fannie and Freddie when all you're doing is buying a bunch of liability?
Well, I got to tell you, I met with a mortgage banker this week to buy. I want to buy my first home, but now like, you're kind of scaring me. Maybe I should wait.
Well, where in the country are you looking at buying it?
In Raleigh, North Carolina.
Yeah, I'm not really sure the market there, but I would look around at what you can rent relative to what you can buy, and you can compare the relative costs. And remember, renting is pretty simple. You just write your landlord a check. But when you buy a house, you have a lot of other factors, other than the mortgage and the opportunity cost of the down payment. You have taxes, you have insurance, you have maintenance. And the maintenance is unknown. I mean, who the hell knows what could go wrong? I mean, I have several houses and stuff's always going wrong. It costs me a fortune to maintain these houses. When I was renting, it was a lot cheaper. When something went wrong, I just got on the phone and I called the landlord. It was his problem. But when you own the house, it's all your problem. The best thing I think about buying a home still is that if you can get a mortgage in the sixes, I still think you're getting cheap money, because I think inflation is going to be a lot higher than 6. So ultimately, inflation pays back a lot of your mortgage. You don't have to actually pay it back. Inflation takes care of a chunk of it. So you end up making money as a debtor, not as a homeowner.
Mm-hmm. Well, there you go. Maybe I'll get a good deal. Who knows?
But you could probably offer a lower price now that mortgage rates are higher.
Yeah. Okay.
I wouldn't pay top dollar. Put in some low bids,
There you go. Negotiate a bit here. All right. So you are calling for dollar crisis, and you'd been talking about that before we got into the war. So I guess my question is, we also have tariffs. What do you think is the bigger threat to the dollar right now? Like, what is the biggest threat to the dollar?
Well, ironically, and maybe not so ironically, if you're familiar with these trading patterns, but the war has helped the dollar. The dollar has rallied a bit on the war, and that's typical as a safe haven move. The war has helped to lift interest rates, and that has also acted as a short-term boost to the dollar. But I think the dollar's rally is not that big compared to rallies of the past under circumstances like this. And I think that shows you that times are changing, and the dollar is not seen as favorably as it was in past military conflicts. And I think as time goes by and the war drags on, I think it's ultimately going to be a negative for the dollar, because it's going to weaken the economy. It's going to lead to bigger budget deficits, more inflation. All this is dollar negative. And, it's just another thing that's going to upset the world, something that the United States has caused, because the world is going to be dealing with higher energy prices, higher food prices, the longer this war goes on. And, that they can just blame that on Trump. Meanwhile, Trump has already pissed everybody off with the tariffs, even though the tariffs are paid by Americans, contrary to the claims of Trump and his administration. Americans pay the tariffs, but to the extent that imported goods are a lot more expensive because we have to pay the tariffs in order to import them, that is, bad news for a lot of foreign companies that now sell fewer goods to America. They have to find other customers, and maybe they can't pay as much as we did. And so, yes, it is, a negative for some companies. And, so we pissed off a lot of these companies. These are trading relationships that have been going on. And, I think we've also antagonized people with our threats. Like, Trump was threatening to invade Greenland. I mean, what the hell did Greenland do? Right? Greenland wasn't a threat to anybody, but Donald Trump decided that we needed Greenland strategically. We needed to own that real estate. And he said, if we can't get a deal, we're going to send our troops in. We're going to take it by force. Now, he never did that. I think he backed away. But the fact that he even contemplated it out loud, I think is a big negative, because it gets people to thinking, maybe they'll do it next time. So I think we've, we're losing a lot of our, credibility. I think a lot of our allies are not as aligned with us. And I think we're driving our enemies closer together. And I think we're even driving our allies to have greater ties with our enemies. I mean, to the extent that we perceive China and Russia as enemies, I think they're making a lot of inroads. In fact, if you look at Chinese trade is growing with Canada, it's growing in South America. Even as it's declining with us, China is now doing more trade with everybody else.
Do you see a scenario where President Trump could be successful on the foreign policy front?
I mean, yeah, it's possible. I just think that the odds that this war is a success are much lower than it being a failure. Now, even if it's a failure, Donald Trump can still claim it's a success. He could define anything he wants as a success, and he probably will. Just like he claims we have the greatest economy in history, and we obviously don't. We actually have a worse economy than we had under Biden. And Biden, he says we had the worst economy in history. So Trump can very easily lie about whatever the hell he wants. And none of the Republicans will call him out on it. They'll all repeat the same lie as if it was true. And in fact, I was listening to an interview with Chris Christie, and he recalled the conversation he had with Donald Trump. And Donald Trump told him, if you repeat a lie often enough, it becomes true. Not that people will think it's true, but that repeating the lie enough makes it true on its own. And so that's kind of his mentality. So, yeah, I'm sure that as far as Trump is concerned, the war is going to be a huge success. But in reality, I think it's more likely to be a failure. And it's not just, anti-Trump. I think all of these wars have been failures, whether they're Republican or Democrats who are running it. I mean, I think we go into the Middle East and we create more problems than we solve. That's been the history.
Mm-hmm. I guess now that we know this is playing out from an investor perspective, has this altered anything for you? And if so, how so?
No, I mean, I was increasing my holdings in energy stocks months before the war started, just because I thought oil was cheap when it was down below $60 a barrel, and I thought the oil stocks were cheap. So those were good buys that I made. I wish I actually had done even more of that. I didn't pare back any of my mining stocks, which have had a very big pullback since the peak. But I still think that the lion's share of the move is in front of us, not behind us. And if anything, this pullback is an opportunity for people who didn't have enough in the mining sector. Now, that didn't include me. I'm so overweight that my position is okay still. But I mean, if we get much more of a downside, even I'm going to buy more. But I think for people who watch these stocks go way up and were, didn't have enough exposure, take advantage of this decline, because investors don't get it. Again, they don't realize that the data is basically confirming everything that I've been saying was going to happen, that inflation was going to run away and the economy was going to be weak and we were going to have this stagflation. This is what's happening. And all this is bullish for gold. So the knee-jerk reaction from people who don't really understand what's happening is to sell gold. But for the people who do understand what's happening, they would buy more.
Yeah, this audience likes gold. That's what I've found is got a lot of folks out there who like gold, even though we're not a gold channel by any means. You did mention oil, looking at it last at $99.82 a barrel. I had a guest on here it was a Peter Bookvar who was like, oh, $60. You'll think that's real cheap. That was not too long ago. But gosh, I saw diesel, and I drive a diesel engine. I'm not an EV girly. Was $5.19 this morning.
Yeah, and oil prices, $100 a barrel is still not that expensive. I mean, we got up to above 140 in 2008. So that was, 18 years ago.
Yeah.
And, so think about how much inflation we've had over the last 18 years. So, where would oil prices have to be today in real terms to be 140 in 1980? So, we still have a long way to go to get back up
yeah,
to
like
that
right
level.
now it's
And
still cheap.
what caused oil prices to really drop in 2008 was the financial crisis. So who knows what would have happened to prices if we hadn't had that crisis, but we had a collapse in demand because we had this global financial crisis, and that brought the price of oil back down. So oil prices could go a lot higher than $100 a barrel, and they will go a lot higher. If the Strait of Hormuz remains closed for a couple more months and the war continues and more of the energy infrastructure is taken out and more of the production, is suspended, yeah, we could be $150, $200 a barrel. So, think about that.
Okay, okay, maybe you have to give me a history lesson because I was in college during that time. Like, what was going on with the energy prices pre-financial crisis before the banks collapsed? And do you see parallels to today then?
Well, back then the dollar was very weak. The dollar was really going down, and it was also saved by the financial crisis. So we haven't seen a big dollar weakness yet. Now that could come. Now, one thing we've seen is gold strength. Gold was very strong leading up to the 2008 financial crisis. In fact, gold had risen from under 300 in 2000 to 1,000 by 2008. So it was a big move. And now we've had a big move in gold too, because we got up to 5,500. Gold was at 2,000 a couple of years ago. So we've got gold going up. And even though the dollar hasn't been that weak, the dollar did recently hit an all-time record low against the Swiss franc. So I think that's a leading indicator of where the dollar is headed. It'll soon be making record lows against all currencies, but it's still a ways to go for the dollar to hit like a record low against the euro or the pound or the yen. There's a long way to go. Switzerland is just a much stronger economy. So that currency has gained a lot. And in fact, the dollar would be a lot lower relative to the Swiss franc had the Swiss government not deliberately undermined their currency to prevent it from going up, because it could have gone up a lot more. And ultimately, it will go up a lot more.
Okay. Can you kind of walk me through how a dollar crisis might unfold? Like, what does it look like? How will we recognize it as it's happening? Like, what are the signposts? Yeah.
Well, $5,000 gold is one of the signposts right there. That's going on. But I think you really want to look at the bond market for a more significant rise in the bond market, because obviously if there's a dollar crisis, there is a bond crisis. The two are linked together because all dollars are promises to pay, all bonds are promises to pay dollars in the future. And if you're losing confidence in the dollar in the present, the last thing you want is dollars in the future, because then they'll be even less valuable. So you'll see the bond market, you'll see the spreads, really widening, the tips, spreads, and the yield curve will be steepening. The dollar obviously will be dropping against other currencies. Gold will be rising. So look at those markets. Those are the key markets: the bond market, the foreign exchange market, and the gold market. And when you really see them moving in big ways, that's a pretty good sign that the dollar crisis is here. By the time it's obvious, then it's too late. Right? By the time the dollar completely implodes, yeah, we had a dollar crisis, but now what? It's too late to prepare for it. That's why, I've been preparing my clients for a dollar crisis for years and years. We haven't had one yet, but we had a phenomenal year last year. Last year was the best year I had return-wise. Our gold portfolios well more than doubled, but even our non-gold strategies. I have a foreign dividend payer strategy where I buy dividend-paying foreign stocks, and even that was up better than 60% last year, and it's doing even better this year. And so I think money is already shifting out of the U.S. into international stocks. Donald Trump talks about all the money coming into the U.S., but from my perspective, money is fleeing the U.S. because the U.S. pretty much has the worst performing stock market in the world in 2026. All the other markets that I'm investing in are doing much, much better, and it's not even close. U.S. is down on the year. maybe 5-6%. Foreign markets are up, even with recent declines.
Mhm.
And so I don't think it's costing people money to protect themselves from a dollar crisis, because I think right now portfolios that are designed to benefit from a dollar crisis are already substantially outperforming U.S. focused portfolios. But once we get a dollar crisis, then that outperformance will be dramatically higher than it is now.
Yeah. Okay. Do you think it's still early innings on that rotation, like out of the US? Where do you see us
Yeah.
in that? And is this like a new regime for investing?
I think it's very early because it really started last year. So, this is the second year of it. And I think the rotation into gold, central banks started rotating out of dollars into gold a couple of years ago. And that transition is ongoing and will accelerate. But private investors have barely even scratched the surface. I think we've seen a little bit of money moving into the gold sector this year, and now maybe some of it is already coming out. People are scared now because it's going down. But I think we're very early in private flows, private investment flows, pension funds, endowments, hedge funds. And I don't even think the retail investor really got sidetracked over the last couple of years into crypto, which is very unfortunate because they're going to lose a lot of money in Bitcoin and other crypto-related investments. The money that was made in crypto was made by all the people who's cashed out, right? That's how you make money in Bitcoin. You sell yours, right? The people who buy it are going to lose money. And a lot of people over the last couple of years, as foreign central banks were buying gold and the price of gold was doubling, Americans were selling their gold and buying Bitcoin. And now the price of Bitcoin has been cut in half. But those trends are going to continue. But when the public realizes that they bet on the wrong horse, they'll move over to gold. And so that hasn't even started yet. So I think $5,000 gold now, it's $4,800. I think this is cheap. I don't think gold is going to stay under $5,000 for long. So people should be buying it. Go and get it at Schiff Gold. Silver's at 75. Silver got up to 120. So it's had a big pullback, but it had a massive breakout. There was a double top just below 50 going back to 1980 and then 2011. And we blew through that. So silver's in a brand new, huge bull market. So people should buy any dips in silver. So you can get both metals, at Schiff Gold. And we have strategies that are specifically focused on gold mining stocks. Those are the ones that I think have the most upside potential. And people, if you're underweight, you really need to get into these miners. I think they're ridiculously cheap. Wait till you see their earnings. The earnings that these companies are going to be putting out in 2026 should blow away estimates. And all these stocks are very cheap, even given the estimates that they're going to blow out. So they're not even factoring any of this in. So, we have separately managed accounts, but people could also buy my gold fund, pretty much any discount broker. We have a no-load share class, institutional share class. EPGIX is the symbol for the no-load gold fund. Today would be a great day to buy it. Markets are closed, but buy it as soon as you can.
Yeah, as you say, like 4,800 for gold, cheap. All right, Peter, where do you see it headed then? Like, do you do price targets? I don't know, but
well, look, I don't have a target because gold's going to keep rising. Remember, when the Federal Reserve was created in 1913, gold was $20 an ounce, and so Now you need $5,000 to buy an ounce of gold. Mm-hmm. And an ounce of gold is no different than it was when the Fed was created. What's different is the dollar. The dollar that we entrusted the Fed to protect collapsed, and the dollar lost more than 99% of its purchasing power. Whereas, when we established the dollar as 20 ounces of gold in the Coinage Act of 1789, gold was $20 an ounce. And in 1913, when the Fed was established, again, it was still $20 an ounce. So when we had a free market and no central bank, the dollar maintained its value, and you could buy an ounce of gold for the same price in 1913 as you could in 1813, right? You had 100 years, the dollar maintained its value. In fact, the price of everything else went way down. So the dollar held its value in terms of gold, but it gained a lot of value in terms of goods and services. But ever since we created the central bank, the dollar has lost more than 99% of its value. So now you need $5,000 to buy the same ounce of gold that you could buy for just $20 before we had a central bank. So that trend is going to continue. As long as we have a central bank, it's going to be debasing the dollar. I just think the rate of decay is going to increase. So gold prices could go to 10,000, 20,000 in the not too distant future, 5-10 years from now. But it's not because gold is changing. It's just because the dollar is losing value. You just need more dollars to buy the same ounce of gold.
Mm-hmm. The dollar story. Okay. The last time you and I spoke, President Trump had posted about you on Truth Social after your Fox and Friends appearance. He called you a Trump-hating loser. We addressed that at the time. But the thing is, the reason I want to bring it up is I think you voted for Trump, or you would have voted for him. I don't really know exactly how it works in Puerto Rico, but I know you were not a Kamala Harris supporter, that's for sure.
No, well, I voted for Trump in 2016.
Okay.
That was my last year in the U.S. Mm-hmm. And I encouraged my followers in social media, on my podcast, I encouraged them to vote for Trump too. Mm-hmm. So yeah, I did do that, but I wasn't very enthusiastic about my support for Trump. I framed it as the lesser of two evils. I just thought that between the two, Harris was worse. Now, I second guess that because Trump is doing even worse than I thought he was going to do. But it's hard to know what Harris would have done, right? It's a counterfactual. There's no way to know.
Yeah.
So, it still might be that Harris would have been even worse than Trump. But the problem is that the next president will definitely be worse than Trump.
Okay, that's what I wanted to ask you.
And the next president will be a Democrat.
Okay.
That is the problem.
Okay, elaborate on that thesis too. 2028, what do you see ahead for 2028?
Well, if you understand what's been happening for the last 3 presidential elections, the incumbent party loses and the party that's out of power wins. And that's because the incumbent party has to defend a lousy economy by pretending it's good. So in 2016, Hillary Clinton had a lie about how good the economy is because she wanted to continue Obama. And she was his Secretary of State. And, she is the Democrat. Hey, we want 4 more years of this. And Donald Trump was like, well, the economy is lousy. The government statistics are wrong. You're being lied to. I'm going to come in and clean house and drain the swamp. Everything is a disaster. Put me there. I'm a businessman. I'm going to fix this mess. And the public believed Trump. And they voted for Trump. Now, 4 years later, the economy has gotten worse. Trump pretends that it's better and that he's already made America great again. And Biden says, no, I feel your pain. Things have gotten worse since Trump was elected. And that was true. And so the voters went for Biden and not Trump. 4 years later, when Kamala Harris is trying to defend 4 years of Biden and she's telling everybody how great everything is, Donald Trump comes back in and says, things are lousy. This is a terrible economy. It's a disaster. And he was right. And he's like, I'll fix it. But of course, the voters voted for Trump. Now, in 4 years, whichever Republican is running is going to have to run on the Trump record, and they're going to have to lie to the voters about how great everything is. The challenger is going to be able to be truthful and say everything is lousy. Things are worse. What the challenger is going to lie about is that they're going to fix it. Mm-hmm. And so elections are won by the person who lies that he's going to make something better, not by the person who lies and tells you it's already good. Because that lie is harder to believe. If you're living in a weak economy and you know it's bad and your cost of living has gone way up and you're in debt and you're worse off than you were 4 years ago, and somebody is trying to tell you that you're better off, well, that's a lie. You're not going to believe that. But if someone else acknowledges how bad it is and then lies to you about how they're going to make it better, well, maybe you don't know that that's a lie. You might as well take a shot at that guy or that gal, whatever. So that's how it's going to work. But, Donald Trump has kind of branded this whole economy with a big T. But people associate Trump with, limited government, conservative. They think he's like another Ronald Reagan. He's pro-free market, pro-capitalism. None of this is true, but this is the perception. And so that's going to open up an opportunity for the Democrats to not just run against Trump, but run against capitalism and say that is the problem. What we need is socialism. Capitalism wrecked the economy, corporate greed. This is what destroyed us. We need government to control the economy. Government needs to take over. Government needs to make sure everything is fair and that people aren't ripping you off. And I think this is going to be very destructive once, if the Democrats get the White House and the Senate and House of Representatives, who knows what they're going to do?
You don't think they'll look at New York as the example?
Prepared. You better be, they're going to inherit a bad problem and they're going to make it much worse. So that's the one thing, because at least had the Democrats somehow won the 2024 election, it would be very fertile territory for some Republican to come in 2028 and say, look, with this socialism has destroyed the country. We need to try something different. We need like a Malay that they have down in Argentina. That's what we need here.
Mm-hmm. What do you think the economic endgame is for Trump?
Well, this is his last term, right? He doesn't really have an endgame. I think Donald Trump's plan is to try to get out of Dodge before, everything collapses. So try to keep inflating the bubble so that if it pops, it's when somebody else is in charge and so they can take the blame. Meanwhile, I think he wants to see how much money he can leverage off of the presidency, how much money his family can make. I think he might have a grudge about all the money he spent on legal bills and other problems that he had during his first term and following his first term. And I was very much a supporter of Trump's when he was the victim of all this lawfare that I never believed was legal or right. And I was, defended him quite a bit. So I clearly wasn't a Trump hater. In fact, I was out there on my podcast when the Access Hollywood stuff came out. I was defending Trump. There weren't a lot of people willing to defend that. I defended that. So I've defended Trump for a long time. But I'm also willing to criticize Trump when he's wrong. And that's something that Trump can't stand. He needs ass kissers that say he's great no matter what. And that's what he surrounds himself with, which is a big problem. Now I forgot what I was actually talking about. I went down a couple of tangents.
You don't see an opportunity to right the economic ship, if you will?
Well, no, we're not going to right the ship right now. We're not even close to that. What we need is reductions in government spending. And Trump delivered the opposite. The big beautiful bill, which he talks about all the time, was a disaster. The big beautiful bill not only didn't reduce any of the excess spending of the Biden years, it added to it. So the Republicans won by criticizing the Biden spending. But the minute they got into power, they decided to keep all that spending and then spend even more. So the problems have gotten worse, not better. The tariffs have added another layer of problem. They haven't made us rich like Trump pretends. And a lot of the other things that he is promoting. If the Democrats were promoting them, the Republicans would be up in arms. But Trump is pushing a lot of this big government socialist policies because he's trying to be a populist. But the problem is you can't solve a problem with popular solutions because the solutions are not popular. When the solutions involve some pain, it's never popular if that's the prescription. You win elections by promising no pain. And so that's what Trump wants to be. He doesn't want to be a good president. He wants to be a popular president. And a lot of times being a good president means doing things that are very unpopular.
Right.
But people will know that they were good in hindsight and they'll look back, gee, those are really good things that were done. But Trump just wants to be popular now. He doesn't care about what later. He wants to be popular right now.
Do you think a lot of politicians
Well, I know what
experience
I was
that?
talking about.
Yeah.
That he wants to make a lot of money. And so that's what he's doing too. I think the Trump family is making a lot of money parlaying the presidency. I think there's a lot of trading going on insider information, not necessarily inside information about a particular company, but Trump and his administration, they're able to move markets. They move currency markets, they move precious metals markets, they move oil markets, they move crypto markets with a Truth Social post. So all you need to have is some advanced knowledge of what Donald Trump is going to post, and you can make a ton of money. And I think this is going on. Plus, the Trumps have already made billions off of crypto. They've basically bled that to death. But it's unfortunate because obviously they're making their crypto money off of others who are losing it. The crypto industry doesn't create any wealth. It just separates people from their wealth. It's a transfer from the people who are selling tokens to the people who are buying them. So the Trump family made a lot of money off of Trump coin and Melania coin, but did they add any value? Does the fact that there are Trump coins around, does that make America a stronger country? Can we produce more goods because we have Trump coin? No, we can't do anything with Trump coin. But what happened is people were dumb enough to buy it and they lost their money, and they lost it to the president, right? His family. I mean, look at hundreds of millions that Barron Trump has made, right? I mean, I'm sure he's a smart kid, but is he really that big of a genius? He's making hundreds of millions of dollars as a teenager. Obviously, he's exploiting his position. One of the things that the Republicans were correct about, and I supported this, was they were all over the Bidens for their corruption, and Hunter Biden and all the shell companies that they were using to launder the money that was obviously bribes. But what the Bidens did was chump change compared to what the Trumps are doing. The Trumps are doing a lot more. I mean, the Bidens are jealous. Hunter Biden's like, oh my God, I should have been a Trump, looking at what they're doing. But one of the things the Trumps are doing is they do it out in the open too. They don't even bother to launder it. They just put it right out there. And it's like, well, look, if we're going to admit that we're doing this, then we can claim that there's nothing wrong with it. Right? That's part of Trump's philosophy of repeating lies and making them true. So if he keeps, telling lies that there's nothing wrong here, then it's true.
Mm. All right, Peter. Oh, you're going to get some Truth Social posts on that one. just saying.
That assumes Donald Trump watches your podcast, which, you got to be on Fox News. That's what he watches. Even at 5 in the morning.
I would love to interview Donald Trump. I would love to interview President Trump. He's welcome to come on the show.
I think he got me kicked off of Fox. I was on Fox Business today, so he didn't get me kicked off of there. But
oh gosh, Peter. Oh man, that's your opinions. just FYI, I just ask the questions and we don't censor. We don't censor on the channel. Okay. Let me ask you the final question then. Number one risk that's keeping you up at night these days, and then the thing that's making you hopeful about the future.
Well, I mean, I'm not necessarily worried about stuff. I mean, I pretty much think I know what's going to happen. So sometimes I'm up at night if things are really volatile, and I wake up and I check prices. So sometimes when the volatility really picks up and things are going on, it's hard to sleep through the night. When you're having and you got your phone right near your bed and you can go and see what's going on. But I think that my portfolio is well positioned, that all of the things that I think are going to go wrong and that will go wrong, that will cause a lot of people to lose a lot of money. I'm going to make a lot of money as a result of those things. And I am not worried that I'm wrong. I'm very confident that I'm right. And so I don't, stay up at night worried about the fact that I might be wrong. I'm confident that I'm right, but I'm right about all these problems that should be keeping other people up at night, especially if they're not protected from those problems, which is, again, why I would encourage people to, become clients of mine so that they can sleep soundly. Because if you know what's going to happen and if you don't have yourself protected, you should have trouble sleeping. Because I do think that when we get the real beginning of the crisis. It's going to happen when most people are asleep, because I think, China holds the cards. And I think that this crisis is going to start in their time zone, not our time zone, when they really start dumping dollars and dumping treasuries in a big way. And so you need to go to bed with the right portfolio if you want to know that you're going to wake up without a massive hole blown in it, which a lot of Americans are going to see. But as far as what am I hopeful about? Look, I am still hopeful that at the other end of this, at the other side of this crisis, we can emerge as a stronger, freer nation. That instead of, the crisis being a catalyst to socialism, it's a catalyst to reject socialism and embrace the free market principles that made America great in the first place. That's what I'm hoping. I don't think we're going to embrace those principles until there is a crisis. I don't think we're going to give up on all the government freebies until we realize that it was all a scam and everybody is broke who relied on government promises. And then I'm hoping we could, go back to our roots of the rugged individual, of free Americans that aren't dependent, aren't reliant.
Not the collective warmth of
on government.
Whatever. Yeah.
My grandparents, all four of my grandparents came here in search of freedom. They didn't come here for welfare or food stamps or housing subsidies because they didn't exist. All America had to offer 100 years ago was freedom. And that was a very powerful thing because other nations didn't have it. And because Americans were free, we were very prosperous. So I would like to go back to that. In fact, Donald Trump often talks fondly about the heyday of America's power in the latter 19th century, 1880s, 1890s. And the reason we were so great back then was not because we had tariffs. It was because the government was so small that we only needed tariffs and we could pay for the whole thing. And so I want to go back to the economic freedom that we had during that time period, which means dismantling over 90% of the government. But if we can do that, then we lay the foundation for a real economic boom. So I'm hopeful that we get to that point.
Mm-hmm.
And maybe what's happening, in AI and robotics will make all of that happen even faster and to an even greater degree. Because we have, while I want to go back to 19th century freedom, I don't want to go back to 19th century technology. I'm very happy with 21st century technology.
Yeah.
So if we combine 21st century technology with 19th century freedom, that is a powerful formula for an economic boom.
I have one quick follow-on question. Is that okay? Do you have to run? Okay. Just on the part, you said that it will start in China. Is what's happening in Iran, because Iran is really important for China, especially for oil. Do you think that's the catalyst then, or did that speed up the risk of this playing out? I don't know if it's necessarily the catalyst, but it's just, like another weight on the scale that's going to tip, the crisis. It just, I think it harms our position. It weakens the U.S. and it ultimately drives our enemies closer together to the extent we think China's an enemy. Look what's going on with China and Iran. I mean, the Chinese ships are allowed through the strait. Mm-hmm. And Iran is now trying to get other nations to trade oil in Chinese yuan. And if they do that, they'll let their ships through. So they weren't doing that before the war, but they're doing it now. Yeah, that'll be something to watch for sure. Peter, always fun to have you on the show. Let's do it again. You said you wanted to do this more often, and I didn't. It took me a long time to reach out to you. We had you on episode 319, and so it hasn't been that many episodes since we had you. I think we're around 350 or thereabouts, or close to it. Matt would know. So maybe we'll do a little quarterly if you're open to it.
Yeah, your audience is growing too, so that's good.
They're growing, and look, they love you, Peter. So Peter Schiff, Chief Economist and Global Strategist at Europacific Asset Management and CEO of Schiff Gold. Thank you so much for being so generous with your time, all of your knowledge, helping us learn. Really appreciate you.
Oh, my pleasure. Thanks for having me on.